All right, welcome back to Stock Choice with Nick for this week's Midweek Movers live stream. In today's live stream, we'll be going over a general market outlook. We've had a pretty vicious oversold bounce or potential rally the last 2 days after Monday's gap down was recovered. We'll go through 8 stocks that I have on my focus list going into the second half of the week. A couple of those were on the breakout watch list that I posted on Sunday morning. And then after that, we'll go through any charts that you guys want to see. Just wanted to call out, thank you so much. We hit 6,000 subscribers. That was the 2021 goal. We hit it about 3 days into 2022. So thank you so much for the support, getting to 6,000 subscribers. This has been an awesome journey. So I appreciate that. As I'm talking and we get the viewers coming in for the live stream, if you guys have any chart requests that you want me to go over, we'll be using MarketSmith to break down each of the stock's fundamentals, group strength, fund ownership, and other trading statistics, and then go through to the E-Trade platform to take a deeper look at their charts. So with that said, I'm gonna jump over to E-Trade first, and then go through just a general market outlook. So we'll start with the S&P 500. Putting in higher lows in each of these pullbacks, which is a little bit different from the NASDAQ, as we're going to see in a couple seconds here, or a couple minutes. S&P 500 putting in higher lows, first low on December 3rd, then we had a low on the 20th, and then on Monday we gapped down. Let's see how much we gapped down on Monday. We opened down 0.775%, 0.75%, sold off at the first hour and a half of the day, and then had a really strong turnaround and closed at the high of the day up 2% off the lows for the S&P 500. And then today we opened basically flat, slightly red, sold off a little bit in the morning, and then continued to push higher and close near the high of the day. So we're about 2.9%, call it 3% off the lows from Monday. 2 very strong closes, and we're back above the 50-day, above the 8-day, and the 20-day moving average. And over the main part of this volume shelf. So S&P 500 looks like we got a very good rally, and we're going to see how is this an oversold rally or just or oversold bounce or a potential new rally for the S&P 500 that is not as tech heavy. I think it has a little bit more credibility with that. So comparing that to the NASDAQ, you could see instead of putting in higher lows, the NASDAQ was putting in lower lows through December 3rd, probably the same days, December 20th, and then on Monday. On Monday, we gapped down 1.3% from the close on Friday, sold off down 2.8% at the low, and then had that very strong turnaround, closing near the high of the day, up 2.9% off the lows on Monday. Same story today, continuation higher, up 4.5% off the lows. So I posted a tweet about this on Monday morning about how you don't want to be shorting oversold stocks, and you don't want, just like how you don't want to be buying an overbought stock, a stock that's already extended from a kind of an ideal buy point. And like we get retail money typically coming in on overbought stocks, buying it at inaccurate places, chances are people either sold their stocks or went short on Monday, seeing all this fear in the market. And I mean, we had 5 down days, or 4.5 down days, where we lost 8.2% in the NASDAQ, which is very, very substantial. Again, making a new low out of all these lows. So we were expecting kind of a relief rally in oversold bounce. But with the NASDAQ compared to the S&P 500, we're under the 8-day, under the 20-day, the green line, and under the 50-day simple moving average, and the main part of the volume shelf here. So let me jump back to the S&P 500, where that is above the key moving averages, basically above the volume shelf and looking much better. The NASDAQ, again, that's very tech heavy, is under key moving averages and under the volume shelf here. So this is going to need a lot more work to actually build out before we start running to new highs there. A couple other charts I wanted to go over is IWO. This is the growth ETF. And zooming out here, you saw basically a year-long base from February of 2021 up until now, where it looked like we were going to flush under this and then have a base failure here. Now, we still might do that. We might just be seeing a relief rally. But I do like the long lower wick yesterday, the high daily range close today. Are we out of the woods? No. We could see some potential resistance basically right where we're at right now. We still have a long way to rally before we get to the main part of the volume shelf, 5.8% there. And then we're still under the key moving averages, the 200-day simple moving average, which is now starting a downtrend, the 50-day moving average, which is in a downtrend, and you have the 20 and the 8-day EMAs also in a downtrend. So are we out of the woods? No, absolutely not. But this is, you would rather this versus a continuation down and no bounce. But by no means are we out of the woods for growth. And taking a look at ARK-K, that's another ETF that I use to kind of gauge how are we in a risk on or risk off environment. You can see from February, let's see, measure from high to low here, down 50%. So the fund lost half of its value from February last year to now. We did get a little bit of a rally from Monday's low, about 9%, but last week this lost 9% itself, 9 or 10%. So what I'm looking here is, does this rally up to the 8-day exponential moving average between this previous low that held as support once, twice, and then we broke through that on the 5th? Does this now become resistance on the way up, similar to how we broke down and then, where is it? We broke down, rallied up to the previous support area right here, broke down, rallied, sold off, rallied again, and then just rolled over. So I'm going to be looking at this 89 to 90 area as a potential short position because we do have another volume shelf here and a lot of overhead supply. So if we are just getting an oversold bounce in some really beat up growth names, once they're done being oversold, once the bounce is done, I do want to be starting a short position on that. All right, that is going to be the general market outlook. Next, I want to go through 8 different stocks that I have on my focus list going into the second half of this week. And I see a couple comments. Good morning from Malaysia. That's incredible that we have people tuning in from all different countries. So good morning. And if you guys have any chart requests, drop them in the comment section. We'll get to as many as we can in the hour. So first, we're just going alphabetical order, so not in order of my favorite setup or anything like that, but CARS, it's in retail wholesale, which is the 131st strongest group in the market out of 197. That in itself is not very strong. It's a C- group strength rating, but within the group of 27 stocks, let me make sure, yeah. Within that group of 27 stocks, it's the strongest on a relative strength basis. It has an individual relative strength rating of 93. In 12th, kind of middle of the road there in composite. That's the overall rating that MarketSmith gives. And 4th strongest in accumulation distribution. So accumulation distribution measures on the high volume days, is it a day where the stock is extending higher or getting sold off? This is trying to capture the large institutional buys or sells. So we have a B+ accumulation distribution, overall composite rating 66. That's on the low end. You can see that is caused by this negative earnings per share, minus 86, minus 75, minus 33, minus 94. Sales are up 1, 4, 52%, and 8%. These are year over years for each of the following 4 quarters, or previous 4 quarters. And then after-tax profit margin up 4, 3, 3, and 2. Want to look at fund ownership. We want to see this number increasing as me and you don't move the stock price unless we have some hedge fund managers on the call or on the live stream. That would be awesome. But the hedge funds and the institutions that have billions of dollars to invest, those do move the stock. So we want institutional ownership to be increasing each of the last 4 quarters because they can't take their position all at once. They need time to build up their position. And that's going to be more likely to support stocks coming back to key moving averages like the 21 EMA or the 50-day simple moving average. And that's kind of what we saw with CARS because from December of 2020, we went from 322 to 411. That's about a 33% gain in institutional ownership. We did have a pullback to the 50-day moving average on that flush yesterday, rallied up, closed at the high of the day, and an inside candle today, closing basically halfway in the closing range, or in the daily range from the low of the day to the high of the day, We closed right in the middle. Ideally, that would have closed a little bit higher, but let me jump over to the other chart. Let's see if we have a volume shelf to work with. So we do right here. We could take a position with a break over 1627, 1628, the previous 2 days highs. What I'm worried about that is we're still kind of in the main part of this volume shelf, and we did have this reversal where we pulled back, looked like we were just railing, breaking over the key moving averages on, that would have been on Friday, but then we reversed lower, sellers stepped in, and we closed at the low of the day. So I'm going to be looking, maybe I won't get the lowest price, but I'm going to be trying to get a position if we break over this volume shelf and we have a little bit more clear skies ahead. So a break over 1650 range is a potential entry point for CARS. Oh, we got 2 Malaysians in the chat. That's awesome. Thanks for joining, guys. All right, next we have Ford. Great relative strength. That's what I want to mention right off the bat. We're above the 8-day, above the 21, above the 50, and the 200-day simple moving average, where if you compare to the NASDAQ, we're under all those key moving averages. If you compare that to the S&P 500, we just got over the 8-day and the 21. So Ford holding up very, very well. A+ group strength rating, auto manufacturers, 5th strongest group right now in the market out of 197. Within that group of 31 stocks, it's number 1 on relative strength, number 1 on accumulation distribution, and 5th strongest on a composite rating. Has a 99 individual relative strength score, 89 composite, B+ accumulation distribution, all pretty good there, especially the relative strength rating, since it's all the only thing that pays you is price. Earnings per share up 183, 487, 137, and then minus 22 the most recent quarter. But did want to point out, on that earnings day, we got a gap up, which started the rally and then into a base. So the minus 22% earnings, obviously not detrimental to the stock. Sales went from -9, +6, +38 to -5, and then after-tax profit margin 4, 10, 2, and 6. Check fund ownership. We increased by 1 from September to December, but we are kind of staying steady in the last 3 quarters there. Maybe with another gap up, this is some funds initiating positions, but we won't get that data until the end of the quarter. Let's jump to the E-Trade chart. So this was a really nice base. If I could bring up like both of the charts, like really quick. NASDAQ, as this was rolling over, and then we compare that to Ford, this was putting in a flat base and actually trying to break out on the 10th of December, but then the market rolled over, this pulled back again, but we put in a higher low on December 20th, where the NASDAQ put in that lower low, and then we tightened up and had an unfilled gap. Let me check. Is that unfilled? High 2101, low 2106, slight unfilled gap, about 5 cents. I did not take this trade on the 3rd, kicking myself because obviously that would have been a really nice position to start, even just on the open. Closed from that up 2.6%, and then we'll just measure from kind of in the base here. Yeah, 17-ish% move from there. Holding up extremely well. We pulled back the last 2 days, or Friday when the market made its low, or Monday when the market made its low. It was still above the 8-day EMA and still above Thursday's low. Good sign. Today we pulled back, undercut the lows in the pullback. That could have been an undercut and rally position to start. I did not take that trade. Again, unfortunate. But then we got another nice move up, closing at the high of the day, up 2.1% today. So what I'm going to be looking for is a break over, let's see, what was yesterday's high? 24.44. Yeah. Whoop. Not a super clean entry. Let's see, is the high 24.95 is the high from the 5th. That could be a potential entry point too. The thing with that is we're just extended from the 8-day EMA about 6%, and we're already in kind of an extension over the last 2 days. So I would love this to tighten up a little bit more. Maybe the market has a quiet day tomorrow and Thursday where we see price and volume tighten up, and then we get a push forward from Ford. All right, next we got Lucid. This was on the breakout watch list going into the week, the video that I posted on Sunday. Also another auto manufacturers, A+ group strength rating, 5th strongest group. Within the group, it's tied for number 1 on relative strength. It also has a 99 individual relative strength score. 3rd on accumulation distribution, and then 9th on composite rating. It doesn't have any fundamentals, no earnings or no positive earnings, sales, or after-tax profit margin to share. But the accumulation distribution, B+, and then fund ownership, we went from 94 in September to 187. Basically, one shy of doubling in that one quarter. So that's something that we really want to focus on, at least have this on the general watch list. It was also showing great relative strength during the time when the market started getting choppy, but it unfortunately rolled over as well. Let me jump over to E-Trade here. And when it rolled over, it broke the 50-day moving average, but then bounced and found support right through here around 35.60 area. And then this is what really caught my eye with Lucid, was on the 6th, we broke this support. This had every reason to continue lower down to the 200-day moving average like Roblox did. It sees some support and then it rolled down. So that's what I thought Lucid was going to be doing when we broke down on the 6th. That would have been, let's see, Monday, Friday, Thursday. On Thursday of last week. And then as the market continued lower on Friday, this put in a higher high, higher low, hit some resistance at the 50-day simple moving average, which it hit once, twice, 3 times before that. So sellers stepping in along the 50-day moving average. Next day, while the market made a new low against the NASDAQ, this was down, let's see, from the close, it was down 3%, but then rallied up, again, hit that 50-day simple moving average. Sellers stepped in, inside candle, only down slightly, when the market was very volatile on Monday. And then today, finally, we pushed out over that 50-day moving average, broke out of that inside candle, took out 43.29, potential entry point there, and then closed up 9%. This was a trade that I tried this twice today, and the mistake I made on this, and I want to call out my mistakes, was I tried to buy this basically right at the open no, not that day. Let's see. Let me go to the 5-minute candle. So right at the open, it was showing great relative strength. I knew this was the stock that I wanted to get into, one of the main stocks, and I bought with a pretty oversized position as it broke out over $42. And then unfortunately, it shook me out. I got stopped out for a decent sized loss there, and then I was able to put the trade back on, but with a smaller size. So my size, that first trade was an oversized position, so I took a smaller percentage loss than my percent gain on this move. I sold this into the extension, about 5% on that, but it was a smaller size, so I basically broke even on this name today. Really frustrating, especially how it acted the rest of the day, but that's just a mistake that I made. Got to own up to it and learn from it. So Lucid, I want to see this kind of pull back, test that 50-day simple moving average, test that $43 area again, and then we'll go from there. And I did want to mention that Lucid had its lockup expiration on January 19th. So that's something to be aware of as well. Insiders can start selling their positions. So that might be an area where we pull back to the 50-day. It gets supported by retail buyers, by institutional buyers, and then we can start flagging out and then build an uptrend again, which would be ideal. So that's Lucid. Let me jump to Micron. This was also on the breakout watch list, so I want to cover this pretty quickly. A+ group strength rating, computer data storage, 16th strongest group in the market. Within that group of 10 stocks, it's only the 5th strongest on relative strength, but it has a RS rating of 92. That's great to see. Accumulation distribution, 2nd strongest, and overall composite, middle of the road, even though it has a composite rating of 98. That's how strong the group is right now. Accumulation distribution, A, Fundamentals, earnings per share were up 118, 129, 124, 177 year over year for those 4 quarters. Sales up 30, 36, 37, 33, great sales numbers. And then after-tax profit margin up 18, 29, 34, and 33%. Fund ownership on this did decline from June to September, but we're starting back up to an uptrend. So over the last 4 quarters, went from 25.90 to 27.14, a slight increase year over year. Let's go to the chart. So this is showing great relative strength. Also had a flush, but while the NASDAQ was flushing well below the 50-day moving average, this bounced right at the 20-day. So we're trying to use a shorter term duration moving average to show relative strength with that. And also you can see kind of had a cup handle breakout. Maybe another handle is being put in here at the top of the cup. But we found support at a 20-day moving average. Don't have a very clean entry point on this just yet. I would love to see this flag out more and then take out the high today, 94.27, as a potential entry point, maybe Thursday or Friday if we get another inside candle today. But I do like the closing range today, even though this was only up 0.3 while a lot of the other names were up a little bit more. Still good action, holding that 20-21 EMA. This is showing the 20-day, but it's basically the same thing. And then we do have a mini volume shelf here to work off. So this is Micron, showing great relative strength, just doesn't have a super clean entry point just yet. Next we have, I don't know why it keeps doing that, C's. So SeaWorld Entertainment, a kind of a reopening play. Leisure Services, 27th strongest group out of 197. So that's an A group strength rating. Within the group of 43 stocks, it's 2nd strongest on relative strength, 5th strongest on earnings per share, and 4th strongest overall composite rating. It's got a accumulation distribution on the weaker end, C- there, but composite rating 86 and relative strength rating 97. Check earnings per share. We were negative, and then plus 195, plus 227 year over year. That makes sense with everything being closed last year. Sales went from minus 48 to plus 12, plus over 1,000, plus 391. Again, that makes sense. After-tax profit margin went from minus 29, minus 26 to positive 29, positive 20. Fund ownership on this also has been increasing from 272 in June of 2020 was when that trend started, up to 387 now. I want to go to a weekly chart on this really quick just to see kind of a base on base action here. So had that nice base, broke out, pulled back, and now we're sitting on top of the previous base there. All right, let's go to the other chart. So is SeaWorld going to move as quickly as some of these tech stocks? Probably not, but this is a chart showing good relative strength above all the key moving averages, not tech related. So again, while the S&P 500 is outperforming the NASDAQ in the last 2 months or so, this is along those same lines. And also we have kind of a left shoulder, head, right shoulder, inverse head and shoulders, potential breakout here. It did try to get out on Friday and then squatted, reversed lower, and then now we have basically the same pivot there with the expectation of there might be some sellers here where we had a gap up on the 5th, 6th, and then we sold off on earnings. So potential sellers in this range, but you could get 2% on the move there, move your stops up to even pretty quickly, and then maybe take some off there. So if we open lower, a break over today's high, 68.46 is what I'm going to be looking at. And then quickly move the stop to even, quickly take some off into profit because there is some selling pressure up top here. So that's SeaWorld, SEAS. Next, we have SIMO, another one from the breakout watch list, so don't want to cover it too much. A+ group strength rating, computer data storage, A+ accumulation distribution, 99 composite rating, 97 relative strength rating, number 1 in the group on relative strength, accumulation distribution, and composite scores. Fund ownership increasing from 151 to 206. Earnings per share went from minus 10 to plus 40, plus 85, plus 124. Sales turned it around, minus 6, plus 37, plus 62, plus 102. So we're seeing acceleration of sales. And then after-tax profit margin, plus 21, plus 21, plus 24, plus 24. Nice to see it getting profitable. Let's go to the chart, SIMO. This is showing after hours down 1.24. It's a thinner traded name, so I don't believe that is the case. But did put in a low against yesterday's low. So while a lot of names were making higher highs and higher lows today, this made lower highs and lower lows. A little bit of a yellow flag, but it's still holding up pretty well. Under the 20, under the 8-day EMA, but still well above the 50-day, and did have that nice gap up, consolidated, and ran again. So not a clean entry point. We thought on Monday, if the market was going to firm up and go on Monday, we had the 2 daily highs, Thursday and Friday, right around the same price. That's probably going to be an area where I would look to add to it if we can just kind of curl down to the right for the next 2 days and then maybe take this trade on Friday. But SIMO fundamentally doing great. Just need to work on a potential entry point. Maybe just buy with a break over yesterday or today's high, 91.78, but it's not very clean. So SIMO. 2 more for you. TWI. This is an auto trucks tires. That's a B group strength rating, 73rd strongest out of 197. It's got an A accumulation distribution rating, a 92 composite. Within the group, only 3 stocks. It's strongest on earnings per share, relative strength, accumulation distribution, and composite rating. Does have, let's go to the weekly chart, a nice cup, and it's starting to put in a handle here. Is this going to be a name that moves super quickly? I don't think so. It did go from, I guess, 670 to 12 in the cup, but I don't know. I don't expect the breakout from this handle to be as quick as that move up. But earnings per share, we went from negative to plus 139, plus 230, plus 270. That's nice. Sales up 8, 18, 53, 48, and after-tax profit margin turning it around, but basically flat. Fund ownership on this has been increasing from 139 last December to 274 this December. I see you guys putting the chart request in. That's great. We'll have another 30 minutes to cover any charts that you guys want to see, so keep dumping any stocks that you guys want to go over with MarketSmith there. TWI. So yeah, zooming out here, you got that cup. Really strong move. Tried to get going again, then pulled back. Lower highs, lower lows on Monday, but then higher highs, higher lows today, up 2.8%. Let me go back to MarketSmith. What was the volume today? 300,000 shares, so not too thin there. This is another one. I would love for it to tighten up. Don't have a super clean entry point right now, but one that is putting in a handle after a nice big cup and something to keep an eye on that's not tech related. And last, I have ZIM. This was another one on the breakout watch list. It's only been 2 days, so A group strength rating. It's in transportation shipping, 21st strongest group out of 197. C plus accumulation distribution, that's on the lower end, but composite rating, 99. Relative strength rating, 99. Within the group, it's the strongest on relative strength and composite ratings. Obviously, it's 99, doesn't get any stronger than that. Fundamentally, earnings per share up over 1,000, over 1,000, over 1,000, then almost 800% year over year. Sales up 64, 112, 200, and 210. So we're seeing acceleration of sales. And then after-tax profit margin up 27, 34, 37, and 47%. This is also just a beautiful, hold on, let me get to the fund ownership. That's increasing from 29 to 109 in the last 4 quarters. It IPO'd in 2020, so we only have 4 quarters to work with. This is obviously a very beautiful chart. Let me actually go to E-Trade so we can measure it. ZIM. Putting in that VCP action. So volatility contraction pattern, that's what Mark Minervini talks about. So from high to low here, each of these pullbacks are going to get tighter and tighter. We had a 32% pullback first, then another one, 26%. Then here, the third one, about 9%. So each of those pullbacks getting tighter and tighter. Ideally, we would have seen volume quiet down in this area as well, but we did see pretty heavy volume selling off. But we're putting in higher lows each of the times we move up. So we have, let's see, what's the low here? Low is 42. So we put in that low, higher low, and higher low, and supported at the volume shelf during the last pullback. So this is another name I tried to trade today. It did gap up, so I was kind of waiting at the morning to see if it would hold 60, or it would hold. It took out 60. I started a position, and then immediately reversed, took me out. And similar to Lucid, I had a larger position on at first, and I didn't put this trade back on, which is another mistake. I made a bunch of trading mistakes today, which is unfortunate because I had the right names on my watch list. Lucid and ZIM were the two names that moved the strongest, were the best setups, and I put the trades on, got shaken out, didn't put them back on, and that was the story for me today. But this is a really strong move, closing at the high of the day, up 4.7%. Now, we do have, what was the previous high here? 62.20. I'm not going to be chasing up here, but I want to see it pull back, test 60, and maybe I can, after it tests and like holds that area, put the trade on with a stop just below 60, can get some tight risk management there. So that's ZIM, the last stock that I had on my watch list for the second half of the week. So now we're going to turn to the chat to see what stocks that you guys want to see. Ford Zim, really showing great relative strength. Absolutely. SIMO, fundamentally so strong. FCX. Yeah, that's a name that I've seen a bunch on Twitter. Metal, mining, and ores. 28th strongest group out of 197. A group strength rating. C plus accumulation distribution. Just caught my eye. Earnings in 15 days. So that's enough time for me to take a trade, but some people don't like to take a trade that close to earnings. I won't hold into earnings unless I have a substantial profit, but I'll still trade 15 days before. Composite rating 97, super strong. Relative strength rating 93. Whenever we have two 90s, it's a name that I want to have on my general watch list. Average daily volume 16 million. I'm actually writing this down. So that's plenty liquid. Let's see, what does it do? Engages in exploration, development of copper, gold, silver in Indonesia, North and South America. All right. Taking a look at fundamentals. Earnings per share up over 1,000, 419, over 1,000, 207, super strong. Sales 15, 73, 88, 58. After-tax profit margin, profitable and getting better. Within the group of 37 stocks, it's 11th strongest on relative strength, 4th strongest on composite, a little bit weaker on accumulation distribution. This is a really nice chart as well. Kind of a false breakout, shakeout, tighten up. Today would have been a nice day to put this trade on. Let's check fund ownership. That is increasing from 1657 last December to 2027 this December. Let's see, FCX. Let's do some measuring here. So from high to low, 35%, high to low, 15%. I guess we would go from high to low here, 7% or so. You can see a couple false breakouts in this area. 1, 2, I guess that's just squatted a little bit, but then what day was this? The 5th. Flushed, tightened up, inside candle on Monday when everything was taking out the lows, so that was a good sign of relative strength. Then today, let me go to the daily chart to see how this played out today. So we opened, rallied, basically right to that same area, hit resistance, came back down, and then took off, putting in higher highs. Nice. So yeah, what I would like to see from being someone on the outside looking in is if we can pull back, allow that 8-day exponential moving average to catch up, allow the chart to tighten up, and then we can manage our risk against this previous resistance, now potential support area with that key moving average underneath as well. If you're already in the name, it's not doing anything wrong, up 3.3%, great closing range, showing great relative strength over the last month or so, and not a tech name. So FCX, great one to have on a watch list. VSTO. Try to get going, then just consistent selling over the last 1, 2, 3, 4, 5, 6 days. Decent volume on the selling too. That's a little concerning, but above the 50-day moving average, above the 21 EMA, bounced right at that today. Let's see, it's in leisure products. So why is what was the other one? That's leisure services. So leisure services, 27th strongest group. Leisure products, not strong. So maybe reopening is the idea behind that. Let's see, designs, manufacturers, and markets, outdoor sports products and sports shooting products. Accumulation distribution, B-, composite rating 88, relative strength rating 93, still strong. Earnings per share, yeah, everyone trying to get outside over the last year, up 390, 827, 241, 119. Really strong earnings per share. Sales 35, 40, 38, 35, so sales aren't dropping off. Earnings per share, or after-tax profit margin, profitable. Strongest name in the group on relative strength, third strongest accumulation distribution, second strongest composite. And fund ownership is increasing, but starting to kind of taper off. Still increasing, but at a decelerating rate. All right, let's see. Is that short Nick in the chat? Let me know. VSTO. Yeah, so pullback 1, 2, 3, 4, 5 days, still above those moving averages. Would want to see it break over the 8-day. Has to be supported here. Let's see the low, 25. So we broke 45 as a potential like round number as support, but not by much. Yeah, this is just a loopy chart. Like in the previous space, this was tighter, still kind of choppy because you had the potential breakout, pulled it back. Yeah, I don't know. Not a name that I'm super interested in trading right now, just because of the price action, but still holding up okay. Let's see. If that isn't Nick from work, please forgive me. I was making a joke. All right, let's see. QCOM. Yeah, another good name I had on a general watch list. I narrowed it down to 8 names for the live stream today, but I had about 22 that I have alerts set on, and QCOM is one of them. Semiconductors, second strongest group in the market still. A+ group strength rating, 98 composite, C+ accumulation distribution, that's on the lower end, but really strong action today, popping back over the 8, the 21 EMAs, closing at the high of the day, but we're back in this turbulence zone. So I don't see a super clean entry point, maybe over Wednesday and Thursday, or Thursday and Friday's highs, 180, what is that? 188, 180, yeah, 188.40. But I mean, definitely holding up better than most semiconductor names. If we take a look at NVIDIA, that's under the 50-day, under the round number 300, under the 21 and 8. AMD, another semiconductor, under the 50, under the 21 and 8, lost the 150 range. So QCOM out of those names is definitely the one that I would want to be focusing on to trade. Good earnings, sales, after-tax profit margin, all of that. Strongest, or one of the strongest groups, second strongest. What is the strongest group right now? Let me check. It says semiconductors. But then it says semiconductors is the second strongest. I don't know. And one of the strongest sectors right now. Let's see, Facebook, weak group, weak accumulation distribution, solid composite. They are definitely profitable. Earnings per share continues to increase year over year. Sales are increasing. After-tax profit margin increasing. Let me just go back to the chart. Facebook. Yeah, broke the 50-day, rallied, couldn't hold the 50. Not really respecting the 50 at all, which is kind of surprising as a liquid stock. Or Facebook, Meta, sorry. Forgot they changed their name. So right now it's got over the main part of the volume shelf today with the move, but we're still under the 200-day and the 20-day. Potential inverse head and shoulders working here. I would like this to tighten up more before I try to trade, but you can see the average true range ATR. Those daily candles are getting wider, so if you're using tight stops, chances are you're going to get stopped out before the actual trade takes off on you. So a little bit of patience, I think, is needed on this. Let it base out a little bit more. Let me measure what it is from high to low here. 22%, not bad. As long as it's pulling back within 30% from the high, that's fine. Let's see. QB. I think that's a bank too, right? Yeah. Banks have been super strong. Look at this. A bank up 600% from the COVID lows. Yeah, banks, financial services are holding up really well with interest rates potentially on the rise there. That's hurting the tech names, doing favors for the banks. So if you want to trade banks, this is probably one of the ones to do it, but up 38% from that move. Yeah, a little bit extended. Let me go to MarketSmith, check that out. QB. Yeah, see, banks are the 13th strongest group, or Banks Northeast, regional bank, 13th strongest group right now. 99 composite, 99 relative strength, earnings per share up over 100% the last 4 quarters, sales accelerating, earnings per share, after-tax profit margin, massive, strongest stock in that group for sure. Fund ownership increasing, checking all the boxes, nice strong uptrend, great relative strength compared to the market. Just a little bit extended short term here. CUBI. MMAT. Have not heard of this one before. Let's see. What do you do? Metals and fabrication. 103rd strongest group out of 197. That's a C+ group strength rating. B- accumulation distribution. I don't know what happened here. Went from 20 down to 5. Negative earnings. Sales, turning it around a little bit. After-tax profit margin, not. Designs and makes functional, complex structure materials that are more sustainable and higher performing. Let's go to their website. This is the first time I'm hearing the stock. So you're kind of seeing what I do when I hear or look at a new stock. I check out what it does with MarketSmith, and then usually jump to their website, read up a little bit, get myself familiar. But looking at this chart, I know this isn't a name that I would personally want to be trading just because, what was it, MMAT? What was the price on this? So stocks under $5, I usually don't want to be involved with because they're much easier to be manipulated. I want to be buying stocks that funds are taking positions in and are going to be supported at key moving averages, stuff like that, where when you have a move like this, where it goes up 600% and then immediately down the whatever, what is this, 86%. Any stock that pulls back more than 50%, I really, really don't want to be trading unless there's a giant volume breakout and then it consolidates after that on the right side of the chart, like near the high. This is not a stock that like I would want to be trading. It's under the main part of the volume shelf, under all the key moving averages. There's just going to be stronger stocks in the market, and when the market is not itself is not in a great place, we want to be more selective, not less selective with our trades. So that's MMAT. EXPI, keep an eye out for further breakouts. Yeah, so kind of the similar idea with MMAT. Down 74% from high to low. That's way, way too deep. With those giant pullbacks, you're going to get a lot of chop on the right side as it builds up the base, because you have a ton of traders trapped at these high prices that didn't use stop losses, weren't managing their risk, bought the dip and then bought the dip and then bought the dip. So when you see these moves off the low, here's an 82% move. You have two groups of people selling into that move. You have the people that did buy the low, selling for an 80% gain. And then you also have the people that are trapped at this price that are now can get out for break even and then emotionally don't have to take that as a loss. They don't think like, oh, that was a mistake, because they're not going to be financially hurt from it because they were able to hold until it bounced back. And then you get that again up to this area. And then you see how choppy this is and not as smooth as the market leaders that we're trying to trade. And then we flush again below all the key moving averages, up 9% today, but you're going to get those oversold rallies. But into the $20 area, that might be a good potential short, right? Or not $20, $33, 20-day moving average, I mean. So if it comes up to this range, let me write this down. I might look to actually short that position because you have that overhead supply, you have a key moving average, and a lot of selling pressure. Let's see, EXPI. Fund ownership is increasing. That's solid, but let's see. 45th strongest group, A-, decent group. So I would say if you're looking at this group, just hit the view stocks and industry. If you guys want to try Market Smith out, there's a link in the description where you guys can give it a try. 3 weeks for $20. But you click the stocks and industry, just sort it by relative strength rating. The other way around. Come on. There we go. And then go through and see, okay, I want my money in this group because it's a strong group, but what stocks in that group are showing good relative strength above all the key moving averages without that overhead supply that we could potentially trade. Let's see, what was it? EXPI. Yeah, because this 46th strongest out of 57, 38th on composite rating. Yeah, not a stock that I want to trade from the long side. You're getting an oversold bounce, but when you have a giant sell-off like that, it's more than likely just an oversold bounce. Let's see. PAG. Yeah, what is this guy doing? This is Penske Auto Group. Weaker group, 92 composite rating, 93 relative strength. I took it off my watch list after it broke the 50-day on here. Broke it on heavy volume too. Basing out, broke back over the 50. Now we're tightening up above the 50, above the 21. Not bad. A little bit thinner, 323,000 shares traded. Strongest in the group on composite, second strongest on relative strength. Good earnings per share, sales increasing, kind of starting to flatten out in September. And then after-tax profit margin solid. Let's check fund ownership. Fund ownership increasing. PAG. So if we lose the 50 again, that might be a potential short. But you do have the volume shelf here too. I don't know. I don't know if it's a stock that I want to trade long, but it's holding up fine. I just don't like how it broke the 50 on such heavy volume and then took a while to rally back, had that resistance again, and then just started to getting over it. And there's still some distribution candles in here too. I'm a little suspicious of this chart, is what I'm saying. All right, INBK. And if you guys haven't subscribed yet, please subscribe to the channel. I haven't set a 2022 goal, but we're at 6,000 now, just hit that. We do a breakout watch list every Sunday morning, and then this live stream either Tuesday or Wednesday. So make sure you have the notification bell on in case I do decide to push it Wednesday. It just depends on how the market's setting up, what's going to be more valuable for viewers. So if you have the notification bell on, then you'll be notified whenever I go live. INBK, another bank. This one is in the Midwest, 20th strongest group. Again, regional banks are holding up really well, rallying on the interest rate news. Earnings in 8 days, something to keep an eye out for, but only 44,000 shares traded on average. Very, very thin. Not something that I want to trade just because it doesn't take that much to move this stock in either direction. So you could have a pretty aggressive gap down that you can't manage your risk against. And that's managing your risk is the number one thing that you want to be doing. So a little bit thinner, showing great relative strength, but too thin for me. LWLG. Yeah, so this chart kind of fell apart. I was looking at it as it was flagging out through here, but we eventually lost the 50-day. It still shows a relative strength rating of 93. This is one of my problems I have. But MarketSmith does have a 3-month relative strength rating as well that you can use. But on the chart, I believe this is the one year or whatever is 1 year on the chart since it IPO'd this year or last year, 2021. Yeah, so one of my rules is not to trade anything under the 50-day moving average. And after we lost the 50-day on the 5th, with a little uptick in volume, I don't have this even on a general watch list. If it's going to be one of the strongest stocks in the market, it'll get back above the 50-day moving average. You can see we have 1 and 2 kind of volume shells as well. So do we get an oversold bounce up to the 50-day and then a potential short area into that? Maybe. Let me write that down again. WLG. But I don't want to be going bottom fishing on a name when we do have strong stocks breaking out of solid bases, ZIM, LCID, moving higher back over the 50-day moving average, stuff like that. So just trying to put more probability on our side before we take the trade. Is there any action you take in these 2 days? Could you share how you handle the roller? So I've been cash for the most part. Any of the trades that I've been making have been intraday. And today I would have loved to own Lucid and ZIM. Throughout the day, I just made some mistakes handling those trades. Really no excuse for me not to own Lucid, not to own ZIM. Definitely a mental mistake on my end. So I would have owned these two as the market started to push higher with a strong closing range, not giving up much of its gain. But are we out of the woods? Not by a long shot. The NASDAQ's putting in lower highs and lower lows. We have the main part of the volume shelf, all the key moving averages, except for the 200-day are above. So anything that I'm doing, I'm trying to get my stop to even as quickly as possible and taking some profit off on the way. I've played RK short a couple times the last week or so, but for the most part, I've been going into like overnight trading in 100% cash position, and I'm doing that again today. Let's see, DAC. We will probably wrap up with DAC. I think this is another shipping, so a play with ZIM. Nice move today, 4.6%, basing out, breaking back over the 50-day moving average after staying under it for a long time. Yeah, with this one, I would just rather own ZIM. Like if I can find a way to get back into ZIM where I can manage my risk versus starting a position with a secondary name with DAC, I would rather take a couple like smaller losses trying to get into ZIM than a cleaner entry on DAC, if that makes sense. It's just one is a leader, has better fundamentals, earnings per share, sales. Their after-tax profit margin is probably similar, but one has been consistently bouncing above that 50-day moving average and just made a new high, and the other is just getting back over its 50-day after a shakeout under the 200-day moving average. So relative strength, ZIM versus DAC, but not a bad chart. Strong fundamentals. Transportation shipping, 21st strongest group out of 197, 98 composite rating, 95 relative strength rating. It's doing all the right things. I would just rather kind of strike out twice trying to get into ZIM than trade DAC. DAC owns 300 million in ZIM. Well then, yeah, I would just rather own ZIM and then DAC. All right, that's going to be the Midweek Movers live stream. Thank you guys for showing up. I hope you enjoyed it. If you did, please leave a like and subscribe to the channel. Do that breakout watch list on Sunday morning and then the live stream either Tuesday or Wednesday night. Take care and have a great rest of your